Well, Indiabulls Housing Finance reported 87% drop in the profit after tax to nearly 126.8 crore in Q4FY20. Well, this was mainly due to the kind of higher provisions that the company took, and this was on account of the kind of macro uncertainties that the business is seeing. The company adopted a conservative stance, as with provisions standing at about 5.5% of the total loan assets. Adjusting for these one-time impacts, the normalized profit after tax stood at about 841 crore rupees. Well, in terms of asset quality, the gross NPAs were down by about 14% on a sequential basis. And in fact, the company effectively achieved zero NPAs, net NPA status. Well, Gagan Banga, the Vice Chairman and MD at Indiabulls Housing Finance, in his interaction with ET Now, mentioned that he doesn't expect to, and he doesn't see any dramatic movements as far as asset quality is concerned. We may see some amount of marginal movement as far as the NPA is concerned, but that would be very marginal and would not would be actually about the same level, the kind of NPAs that the company is seeing. However, as far as the provisioning is concerned, they'll continue to remain very cautious in terms of provisioning, and will timely assess the kind of situation that's evolving in front of them. Operationally, the company has been trying to cope up with the NBFC crisis that started 2 years back, and even now they're trying to navigate their way through the kind of macro uncertainties that COVID-19 led pandemic poses to them. In fact, as far as the moratorium is concerned, the share of retail customers opting for moratorium has reduced to 25% as of June 2020. And as far as the collection efficiency is concerned, the company and the management said that they have seen the collections improving or nearly doubling from April to June period. So this definitely is a very positive, and the company has been very proactively taking measures and reaching out to their customers for them to start paying their installments, and some of these efforts have definitely been paying off for Indiabulls Housing Finance. Well, as far as the demand for loans is concerned, the management reiterated that their focus would mainly remain on securitization and co-origination models from within the retail space, which would be their focus going forward. They'll continue to emphasize on home loans and LAP portfolio. The company would continue to regrow their wholesale developer loan portfolio, and is in talks with various investors for sell downs and refinancing of developer loan assets. There continues to be risk averseness as far as this segment is concerned, but the company is confident of making their way through sell downs in the developer loan portfolio, given they believe that their portfolio is of a good quality. Well, additionally, on the fundraising, the company said that they're raising funds close to about $300 million through equities, and the board took an enabling resolution in order to meet the kind of growth potential that lies from second half of FY21, and at that time they do not want to worry about any capital issues that they may face. So they want to be very prepared for the situation going forward. As far as the growth is concerned and the demand for loans are concerned, he said that we may see an uptick from second half of Q2 FY21, but nevertheless the proper growth would definitely kick in once the economy recovers, and this would be somewhere around October onwards. So we all are watching out as how the growth scenario evolves and how the entire COVID-19 led pandemic evolves. But having said that, the company's profitability in Q4 was definitely impacted by the conservative stance that the company took.